Most people can make money in the long run by following Warren Buffett's advice. Moreover, choosing profitable stocks is not a part of it. According to him, most individuals ought to own a cross-section of businesses that, on average, are bound to do well. Investing in an index fund is the easiest way to accomplish this. You could become a millionaire using Buffett's preferred index fund. But before we dive in, make sure to subscribe to our channel Financial Freedom and press the bell icon to stay in touch. Let's start with Buffett's favorite fund. 1. S&P 500 Index Fund. Back in 2013, Warren Buffett, in a letter to Berkshire Hathaway shareholders, gave some smart advice. He said most folks should invest their money in a low-cost S&P 500 index fund. It's like a basket holding shares from the 500 big companies in the S&P 500. Buffett didn't just talk the talk, he walked the walk. He even said in his will that 90% of the money he leaves for his family should go into such a fund. That's a big endorsement. Buffett's love for the S&P 500 goes deeper than just numbers. To him, it's like a magic gateway. Keeping things simple is Buffett's golden rule. Don't make it complicated. He, along with his buddy Charlie Munger, believes in passive investing. Trying to beat the S&P 500, they say, is like denying reality. Instead, they see index funds as the future, the smart way to build wealth without breaking a sweat. Now let's talk about the other S&P 500 index funds type. They match perfectly with Buffett's advice about owning a bunch of different businesses. These funds invest in the 500 big companies from the S&P 500. That covers 11 sectors and 24 industries, a diverse mix to keep your investments safe. 2. SPDR S&P 500 versus Vanguard 500 Index Fund ETF. Initially, 2 exchange-traded funds for the S&P 500 are part of Berkshire Hathaway's portfolio: the Vanguard 500 Index Fund ETF and the SPDR S&P 500 ETF Trust. Second, Buffett stated in his 2013 letter to Berkshire shareholders that he suggests Vanguard. Based on these 2 clues, it's reasonable to argue that Buffett favors VOO as his preferred S&P 500 index fund. That makes sense, given that it has an extremely low expense ratio of just 0.03%. In contrast, the expenditure rate of SPY is 0.0945%. Can investing in VOO make you a millionaire? Based on history, it's a yes. The S&P 500's average yearly total return during the previous 50 years was around 10.7%. However, the overall return is just one part of the equation. Important factors to consider include the amount, frequency, and duration of time you provide your assets to grow. With a historical average total return of 10.7%, the table illustrates what it would take to make $1 million. Undoubtedly, there is no assurance that the S&P 500 will continue to provide returns at the same rate as they have in the past. However, earning $1 million with VOO investments is a realistic goal for many people, even if the profits slightly fall. The second index on the list is a need if you wish to invest in the S&P 500. 3. VFIX. Imagine you have a special kind of investment called VFIX. It's like holding a little piece of the top 500 big companies in the United States. You may know these companies like Apple, Google, Amazon, and Microsoft. Now, investing in VFIX is like buying the coolest stuff from all these famous companies. It's a way of saying, I want to be a part of the success of these top 500 companies. VFIX is an index fund, and it's like a shortcut to owning a bit of many different companies. The cool part is that when you invest in VFIX, you're not putting all your eggs in one basket. If some companies in the basket don't do so well, it's okay because the other ones might do great. This helps to lower the risk of losing money compared to if you invested in just one company. Warren Buffett, a smart investor, once said that when investing in index funds like VFIX, you should consider the cost. Luckily, VFIX is known for having very low costs. This means more of the money you make stays in your pocket, and you don't have to pay a lot of fees. Remember, investments like VFIX work best if you're patient and let your money grow slowly over time. It's not about quickly buying and selling. If everyone only bought these kinds of investments, things might work better than we expect, but they're a smart choice for most people. 4. VT Sachs. When it comes to investing, there's a lot to chew on. The options seem overwhelming, from large to mid-cap and small-cap to different industries. But fear not, because there's a financial wizard in the mix, VT Sachs Index Fund. This little gem could be the only index fund you need for a lifetime of smart investing. Warren Buffett, revered as a sage in the realm of investments, has long extolled the virtues of VT Sachs index funds, positioning them as a linchpin for many astute investors. Like a well-curated buffet, this financial instrument offers various benefits that have garnered Buffett's resounding approval. What makes VT Sachs so special? Well, it's like a buffet that covers almost everything. Think of it as a magic basket holding a piece of over 3,500 stocks, including the top 500 publicly traded companies in the U.S. Even if some of these companies stumble, you still have a whopping 3,000 others to rely on. It's like a safety net for your investments. Buffett drops some investment wisdom on us. The goal of the non-professional should be to own a cross-section of businesses that, in the aggregate, are bound to do well. VT Sachs aligns perfectly with this philosophy. It's like owning a slice of the business pie, diversifying your investment risk. Even if some companies falter, others may carry the load, reducing your overall risk. Buffett loves the S&P 500, and rightly so. It's like the superhero of index funds. But here's the twist. VT Sachs has a sibling, the VTI, with a 0.3% expense ratio. Now, that's a tad higher than VT Sachs's 0.04%, but it's still a steal compared to other funds. 5. The FZ rocks. While VT Sachs is a star, there's a rising champion in the index fund arena. The Fidelity Zero Total Market Index Fund, FZ rocks. This fund is a game changer as it's entirely free. Yes, you heard that right. Zero fees. No minimums, no expense ratio. It's like the superhero of index funds without the cape. Fidelity stepped into the arena with a bold move, challenging the giants. Unlike Vanguard, Fidelity offers a zero expense ratio, saving you money as your investment grows. Imagine saving $400 a year per $1 million invested. Those savings can add up over time. VT Sachs, S&P 500, and Fidelity's FZ rocks stand as virtuoso performers in the symphony of investments. Buffett's enduring wisdom underscores the importance of simplicity, patience, and a long-term perspective in investing. If you have any questions, feel free to drop us an email. Don't forget to subscribe to our channel, Financial Freedom, and hit the bell icon. This way, you'll receive notifications whenever we upload a new video. Thanks for watching.